What's going on, guys? Welcome back to the channel. My name is Matt. So we got the rate cut. It happened. Okay, 25 basis point rate cut occurred yesterday from the Bank of Canada. And we have now brought the prime rate down to 6.70%. So this is significant news for anyone with a variable rate mortgage. Essentially, a lower rate means a lower monthly payment, which can provide some much needed relief for many homeowners. For those of you with variable rate mortgages, you'll see a decrease in your mortgage payments. This is because your interest rate is tied to the prime rate. So when the prime rate drops, so does your interest rate. This can make a big difference in your monthly budget, right? So giving you extra cash for other things, whether you choose to save, invest, or spend that extra money, it's a nice bonus. Fixed rate mortgages, on the other hand, won't be directly affected by this rate cut, but it's important to keep your eye on the overall market trends as lower rates can influence the fixed rate market over time. So if you're coming up on renewal or thinking about refinancing, it's definitely something to watch. Lower rates can make switching to a new mortgage a lot more appealing now. This rate cut could also have broader impact on the housing market. So let's dive into what that could look like. Lower rates definitely means increased borrowing is available, which can drive up demand for homes. Now, this could potentially stabilize or boost home prices from here, which is good news for sellers. For buyers, the lower rates mean more affordable monthly payments, making it easier to qualify for a mortgage and purchase your home. However, it's important to know that the market is definitely influenced by many factors, including supply and demand, economic conditions, and government policy. So just because rates are a little bit lower now doesn't mean home prices are going to skyrocket. It's definitely a complex play of so many different elements, right? So this rate cut is a good sign. It's a good thing, but let's look at it from an economic perspective. So a rate cut is designed to stimulate growth in the economy. So lower rates can encourage spending, investment, which can help boost the economy, but it's also a balancing act. And I believe the Bank of Canada sees the Canadian economy starting to deteriorate heavily. That's why they're starting to make these cuts. They see the economy is not in the best place in terms of job growth, in terms of GDP per capita, and by other measurements. So what should you do in light of this new rate cut? For those with fixed mortgages, it might be a good time to renew mortgage terms and see if refinancing could be advantageous to your finances. Sometimes breaking down your current mortgage and locking in a new rate can actually save you money over the long run. And one thing that's really interesting about this recent rate drop is, in my personal opinion, it seems that variable rate mortgages are starting to look a little bit more enticing, a little more interesting right now. Prime rate is around 6.7. So a lot of, I would say, variable mortgages are probably around the mid 5 range, maybe 5.5 to 5.7. Maybe you can get a little bit cheaper or higher than that, but that's around the range that variable mortgages are at now after these recent cuts. They are still higher than, let's say, a 5-year fixed or a 3-year fixed, but I think they're getting a little more interesting, especially if the Bank of Canada cuts, let's say, by 1.5% by next summer or the end of next year. Variable mortgages then could be at 4% or around 4%. And when you think about it, like, if you can get a variable mortgage now and by the end of next year it's around 4%, you're in a better position than someone who gets a 3 or 5-year fixed mortgage right now. But again, you always have to be prepared for that upside potential and be ready to weather higher payments potentially. Because again, there's always a chance that inflation or unemployment could go up. And if those things happen, they're going to stop cutting rates, potentially even raise rates again. That may not happen, but it might happen. We always have to be ready for those scenarios. So should you switch to a variable mortgage now? Let's say if you're fixed, I would say it depends on your financial situation and your risk tolerance, of course. Variable rate mortgages tend to have lower initial rates compared to fixed rate mortgages, which can be very appealing. However, it's important that variable rates can fluctuate, right? And right now the spread between variable and fixed still favors the fixed rates, right? But the variable rates are getting a little more interesting now, a little more enticing, especially if the bank keeps making these cuts over the next few years. It all depends on how the economy pans out, what happens with inflation, what happens with unemployment. We're going to keep a very close eye on those numbers on this channel over the next few years. So if you want to keep up to date with all those things, please subscribe for more videos. But in my personal opinion, I still think like a 3-year fixed, even a 5-year fixed is kind of the way to go right now. I think 3-year fixed is really the sweet spot of what most people should go with right now, because it gives you that time to take advantage of a bit of a lower rate now. And then when you do renew, if rates come in lower, then you're able to take advantage of a lower fixed rate in 3 years from now. And then 5-year fixed, you're getting probably an even lower rate, but then you're stuck in that rate for another couple of years. So maybe rates go down further over those, let's say, last 2 years of that 5-year fixed. So again, a lot of things can happen. I think variable could be a good option right now. It's definitely an interesting time to evaluate your options, weigh the pros and cons. So make sure you call a mortgage broker such as myself. Always here to help you navigate these new financial situations. If you guys do like the video, it really helps me push these videos to a new kind of audience that would really benefit from this kind of information. So I'd really appreciate it. And until the next video, guys, take care.